As part of my overall trading strategy, I usually keep strangles going in three different futures: gold, oil, and soybeans. The way I normally do it is I'll enter a trade a week and I try to keep the trades open for 21 days or less. I just closed a trade today in oil and I want to take a look at it. It was part of the members' portfolio. For those of you who are getting the members getting the members' emails, this is a trade that you had. You can take more or less than I do, depending on how you want to manage your account. I'm using $6,000 as my buying power used. It's actually about 2,500 when I open the trade, but I like to allow for if the position moves against you, it can your buying power that it uses can go up. So I like to make allowances for that. You see, I opened the trade on 126. Like I said, I try to keep these open 21 days or less, and then I'll start trying to look to close them. Showing I was looking to close it on 216. I actually hit my target today on 27, so I went ahead and closed it. So it leaves me short a contract for this week, which I've already opened another oil position in order to replace this one to keep my normal number of contracts going. You can see I entered it on 126. I tried to go 60 to 90 days out on these. I was a little short of that on this one, but typically I'm in that 60 to 90 range. I sold the 110 call and the 55 put. I typically will get on, especially on oil, I will get less for the calls because I think oil is more likely if it were to start to go up a lot that it would go against you quicker than it's going to go down from where it's at. Excluding a COVID type event, there's going to be value in oil that it's going to hold certain levels on the downside. Yeah, I do look at the price of the dollar and some and other things that are going on in the world as I look at this. But most of those, again, I think my risk is to the upside. So I'll typically take a little bit smaller credit for the call than I do on the put. I opened it up for 25 cents, which is $250. My commissions were 754. I'd actually put in a good to close order at 0.14, which is about half. I decided to go ahead and close it today at 0.15 because I felt pretty good about the return I had on the length of time I had in the trade. So you can see I closed it on 2.7. Paid 4 cents or $40 for the call, 11 cents or $110 for the put. Again, I had commissions $754. So I had a total profit on this trade if I only did one contract of $84.92. Again, I have multiple contracts going. I do this one as part of the members' portfolio, so I try not to do too many contracts in these because some people don't have as large of portfolios as others. I was in the trade 12 days. The return on my $6,000 buying power was 1.42% for an annualized return of about 43%, which is higher than I typically shoot for on the overall portfolio. So that's good. And again, keep in mind, my buying power used was actually a lot less than $6,000. It's probably between 2,500 and 3,000 throughout the term I was in this contract. But that could go up, so I always allow for more on these top trades. That way I have enough buying power in my portfolio in case something does go against me. Overall, good trade. Can't really complain. We're going to take a look at the chart right now and let you see what I was looking at when I entered the trade. Of course, I'm looking at the weekly chart right now, and these are my standard indicator packages that I typically keep up in all of my trading. It just helps me get a quick glance at what's going on. Obviously, these are weekly because I'm doing long-term strangles. You can see the downward pressure in oil, which will make you think it's going to keep going down. And normally I would respect that in most commodities, but with oil, again, I just believe there is a certain buy area where it's going to get bought. And I think there's a lot more risk for it to shoot straight up in case something were to happen. I entered it right here on, it was actually on 126, so that would have been, I actually got this arrow in the wrong spot. I would have been right here is where I entered it when it was up right in that area. Let's move that over so we can get that correct. I think that was on my old chart. I had that arrow in the wrong spot and forgot to move it. So I entered it right here. The oil was up some, which is one reason that I had the 55 put that I sold. I still tried to stay away at, at this 110 area on the call. I didn't want to get up in that area if I could all help it. And it was trading right in this range. So it was right in the range where you would expect it to hit and drop back down if it's going to maintain this pattern. I had other contracts going that were stacked in other areas, so it made sense for me to enter the 110.55. You can also see here, when it came up and it hit this this Bollinger Band, right, the middle Bollinger Band right here. Again, you'd expect it to hit that and come down if it's going to stay in its trend. If it breaks through it, then of course a new trend could form. And then your moving averages. This is another chart that I use. You can see it came up into this one, which was the 20. And it hit on that and bounced down, because that 21 is very similar to what we have right here. So that's where I expect it to find resistance if it's going to come back down. And this is also a 21 EMA right here that it's hitting. So everything did make me think it was going to move back down, but I really thought we'd get buying at around 70, which we did. It came down to 72 and then it started back up. But again, I'm selling premium. All I want is time to decay and for it not to make any sudden moves. I trade a lot of futures this way. Again, mostly gold, soybeans, and oil. This week, I'm probably going to put on a corn or a wheat trade just because I just entered an oil trade. And even though I'm one short on the number of contracts that I typically have out, I don't want to enter two trades the same week in oil. I might be able to catch up with it next week if I'm short a contract in something else. So this week, I may put on a trade in something else, but I'm full on soybeans right now. I'm full on gold trades right now. One short on oil, but I don't want to enter two in the same week. So you'll probably see at some point a wheat or a corn trade where I've done a strangle in it, which I don't typically do. If the VIX will pop up for me, I may do an ES trade, strangle in it also. I missed an opportunity this morning. The VIX got to 19.75. I was waiting for it to get to 20, but it's already dropped back below 19. So we'll see how the rest of the week plays out. I still might be able to get a trade in. I'm going to put a link down below if you're interested in joining or being on our newsletter or have interest in our members portfolio and getting those trades. It's not currently open as the time while I'm making this video, but I hope to have it open soon to new members. I'm still trying to work out some of the mailing issues and getting everything out to everyone. I've been doing a lot of that by hand previously and having to change who was on and off of it by hand, which is kind of a pain. It takes a lot of time. I'm trying to get that automated so I can open it up to more people. I'm not going to have too many people on it. On the futures trades that I make, it's not a big deal, but on some of the stock trades we do, if you have too many people, you end up bidding against each other, which I don't like. I've run into that myself with other people's programs, and I always hated it. It doesn't matter on futures trades. If you're just going to follow me for that, it's not a big deal. We can certainly help you there. If you have any questions, comments, let me know. Let me know if you like this video, and I hope to see you next time.